Nick Twidale from FP Markets joins us for more. Nick, really trading this week has all been about, I suppose, preparing, positioning, maybe trying to take advantage of this CPI data coming out tonight. What are you seeing?
Yeah, I think it's exactly what you just said. It's been a focus all week, and unfortunately for us in Australia, it comes right at the end of the week. We've seen that dollar appreciate, and even we got hints from the sort of the Fed minutes last night that they're still on this hawkish part. So what we're seeing in most of the major currencies is that the dollar is king. What I suppose you've got some slight glimmer of hope that from the minutes last night that they are acknowledging that we could see things move slightly differently in the next 6 to 9 months. And this CPI print is going to be very, very important. If you just look at that base number, I think we're expecting 8.1 on the year-on-year number tonight. That's still a very big number, and that still points towards more hawkish Fed moves and more hawkish Fed jawboning, I think.
Yeah, absolutely. The flip side of that, of course, or at least locally, is the Australian dollar. We'll get an Aussie dollar chart up just now. This is what you're looking at the moment. I mean, clearly in a downtrend, but more pertinently, this longer run view. What's kind of, how do you interpret what you're seeing here?
I think, we've clearly seen, as you said, a big downtrend. But if you look over the last couple of months even, it's steepened. And I think we were expecting that. The Aussie had held up relatively well, I suppose, in the earlier part of the year. And you can probably see it's ground lower, whereas we've seen some pretty sharp moves, especially in the cable and euro, etc. Aussie sort of played a bit of catch up over the last few weeks and months. And sitting underneath 63 cents, a lot of people were looking for these kind of levels. But now we're down here, there's not really a great reason to be buying it, to be honest. The RBA's sort of changed tact a bit for us as well, and that's led to the Aussie sort of retreating a lot on the crosses as well. So it does come back to the Aussie at the moment. We're looking at that number tonight. So if we do see a stronger number in particular, I think it opens the way to 60 cents fairly quickly.
Yeah, okay, absolutely. Well, that's the hourly. Let's do we have the daily chart there as well? Oh, that's the hourly. It's there. We shifted across.
Yeah.
Okay.
That moves sort of back to the hour, and as you can see, we're like the market. We're in that sort of consolidation zone. We're waiting for that next catalyst, and that's going to be the CPI number tonight.
Without a doubt. Euro's obviously got a few issues weighing it down. A lot arguing that maybe we're starting to see a bottom. We'll get the daily chart up there. How do you interpret things at the moment?
Yeah, I think so. I think even on that daily chart, it does show that we're once again firmly in a downtrend. That chart alone tells you probably to sell rallies, and the fundamentals do as well. I think, once again, we're looking at that number like we can't go away from this CPI number tonight, can we? And I suppose you're having that conversation with everyone you speak to today.
And for the rest of the week as well.
Yeah,
up to this point, yeah.
But you can see, we've got, to be honest, that daily, it does give us trading levels. Like, we've got a low set in place. So, guys that are looking to pick some up, they will pick them up ahead of that low. I would say the bears will be looking for any break of that. And to get a break of that decent lows that we saw sort of earlier in the year, you're going to need a strong CPI number, and that will obviously back up more Fed moves to the top side and a more hawkish Fed.
Yeah, okay. And we'll look at that hourly chart as well. Perhaps a bit of a continuation pattern emerging there.
Yeah, same thing we're seeing, very similar to the Aussie dollar. We've got a bit of consolidation around these levels at the moment. There's probably some options interest that's coming in and keeping us in relatively tight ranges. And it's that catalyst that's going to move us out. And that gives us a better view of where we're looking, sort of down, anywhere near down 95 now. I think that sort of opens up the way for another couple of big figures to the downside. Now
let's talk about the Japanese yen, because we're waiting for the BOJ potentially to step back in here at a level above where it intervened recently. Some dovish commentary as well, I think, from Kuroda last night or perhaps yesterday. How are you seeing this shape up?
Yeah, I think once again, I'm a bit like a broken record at the moment, aren't I? It's sort of, whichever way you look at it, there's going to be dollar strength. There's jawboning, certainly. I think that's one change we have seen over the last couple of weeks, is there has been jawboning and there has been action from central banks. We've seen it in the UK and we've seen it from Japan now, but they're slowing down the market. And I think charts are starting to show that there is a slowing down in that dollar appreciation. Whether they can stop it, I don't think they can. And you're looking at, we're hitting to some very high levels now. We're looking to, I think, we're not far off the high from back in like the 1990s. So if you break through there, it does open up higher moves unless we get a severe change in the fundamentals. So at the moment, I think central banks, they're probably going to slow things down. There might be some smoothing action, but they're not going to change the direction of the move in the currencies.
Yeah, and you can see those upward trend lines, support lines there.
Yeah, to be honest, I was trying to pull out these charts for you guys, and it's tricky. You have to go back quite far to find any decent levels now. And they're grinding high. Like dollar yen's grinding higher. The other majors are grinding lower. So it's quite an interesting level we're at, because we're breaking to these fresh levels that we haven't seen for years and years and years.
Yeah, for sure. Okay, that other classic, well, funding currency perhaps you'd call it, is the CHF, the Swiss franc. Haven't paid attention to that much recently, and I suppose we don't give it enough airtime, at least this corner of the world, but also looking at like a fairly interesting setup there too. The Swiss National Bank, of course, not shy in intervening sometimes. Yeah, every so often.
They've probably been the most effective central bank intervention, haven't they, over the last few years? Yeah, I think we threw this in again. I think it came out, and it's just a very interesting setup, I think. So for technical traders looking at that high has obviously been respected on a few times. This is on the daily chart. It's been in a nice upward, but it's been pretty erratic, right? If you look at the other, currencies we were looking at in the majors, they've been fairly consistent. It's been sharp, really. So I think the most important thing that we brought out this is there's a clear trading level that's coming in at that top side level, and once again we go all the way back to the fundamental data coming out tonight, whether we're going to see that challenged.